You mentioned earlier you are looking for a move into what you call the real assets space, probably through an acquisition. Tell us exactly what that means and why it fits into the Mercia strategy.
And I think the acquisition piece of Mercia is really important to first start at. And we have a team within Mercia that sort of leads the acquisition approach. Martin Glanfield, Mercia's CFO, is absolutely at the front of that. Yeah. And what we're doing is, the first point is, the acquisition compresses time. So if we're here and we want to get there, can we get there faster? And if so, what out there could help us get there? And usually that means, so if I use the journey of the acquisitions, because we've done 3 over the last 10 years. First one was we set up in the Midlands and we wanted to grow. And we knew that British Business Bank was bringing its first generation of funds through, and we didn't manage any of them. So what do? Enterprise Ventures, dominant provider of debt and of venture capital across the north of England, a backer of previous British Business Bank funds, perfect fit. And the combination of those 2 businesses, and many of the Enterprise Ventures team are still with us today, combination of those 2 businesses meant we went from the Midlands to Midlands and the north of England. Right. And we went from small amount of venture to venture and debt, and we went from no relationship with British Business Bank to a firm relationship with British Business Bank. So the second acquisition, then you lean to, okay, well now we can write checks from typically 100,000 to maybe 1 million or 2. Mm-hmm. How do we get into the next, if we believe in a business, how do we carry on providing that capital? Yeah. So the next point was, well, who is out there providing these forms of capital? And what fits with our ethos about, it's not just about finding the best in London, but maybe in Newcastle or maybe in Manchester. How do we fit with that philosophy? And the VCTs that we were just talking about, perfect, because you can write bigger checks into that. Yeah. And there's a requirement. I mean, the reason why these have tax incentives is they are addressing market failures. And so there is a requirement to find those businesses that historically struggle to find capital to meet that demand. And that means now we can write much bigger checks into venture. So then the next bit with that same philosophy is debt. We're writing relatively small checks into debt. How can we build that out? And actually we quite like the look of property. How do we move into that roll forward to FDC? Now we're writing much larger checks in debt, so we can do that beginning bit all the way through, and we move into property finance, which is sort of an adjacent piece, still lending money, but now to developers rather than to SMEs, if you like. Yeah. And then the logical route now is, okay, we're lending money to developers. How do we actually move into ownership of those assets? How do we move into, and I think it's difficult to read the press or hear on the radio, there is a huge demand for affordable housing in this country, quite rightly so. Anybody who's got children will know this, quite rightly so, there's a demand for that. So you have a market pull, back to Mansion House, and you have a market push, trying to get into capital and trying to provide capital domestically, and you have a governmental and you have a regional government, you have very vocal mayors. Everybody is crying out for more affordable housing. That is our next logical step to move into that market sphere. And the best way of doing that, just from the previous 3, is acquire into something you're familiar with, but bring the capability and expertise in. And that will be an area we are exploring at the moment.